Hi, I'm Joel Kelly, and I'm the founder and CEO of Eve. So, an event company in 2020. What a great idea. When I was running music festivals, in a good year, you could still see 1 in 10 being cancelled, and we alone were hosting 400 major events a year. Even in the best of times, most event organizers, including ITC, are actually pretty disorganized. Events take 18 months to plan the same thing every year, and insurance is barely even on their radar. They buy their policies just a few weeks in advance, costing hundreds of thousands of dollars, and they end up losing 300% for a one-day event. And this happens thousands of times a year. We build tools specifically to solve event organizers' problems, provide real-world insights into their data, and use these to provide what we call insurance as a service. This is the idea that you should provide more than just a basic insurance product to your customers. You should actually provide them with things surrounding that which make it inherently a better risk and a better product for them to want to actually use and boast about. And the fundamental idea is that you are ensuring rather than insuring. Of course, you need to include the core insurance coverage so that they know that they can be assured if everything does go horribly wrong that you will pay out. But provide them with extra things which sort of give them that full experience. So give them software which actually solves real customer problems and helps them understand why they're a risk. Use that software in order to gain data insights, not just for you, but also your customers. Make them inherently be lower risk day to day just by using the software. And then by understanding those risks, you can be more proactive and offer different risk mitigation products and be able to actually manage the risk yourself without having to just wait for the customer to tell you what's actually gone wrong. And that's kind of the core of it, is really understanding the real world risks of your customers. You need to immerse yourself in their lives and the problems that they have in order to actually tackle those risks, understand them, and help them. So you can break that down into defining the risks. We curated a portfolio of real world risks that event organizers face, and how we can detect them, how we can mitigate them, and how we prevent them in the first place. Then actually use the data that you collected from the software to detect and track those risks in real time so that you know when to step in with advice and how you can prevent it from getting worse. And in the event that you can't prevent it, you can at least mitigate it and you can figure out how to make sure that it doesn't become a complete catastrophe. In the events world, that idea is really simple. For example, with when it starts raining at an outdoor music festival and they're building the event, they've got trucks driving on grass. It basically, the truck starts sinking in the grass. So you need to actually monitor that. As an organizer, you wouldn't really know whether that's going to be a problem. You're not always looking at the weather reports, but you can know if you do get a notification from a software service that says, oh, in 6 hours' time, it's going to start raining. And we know that you're still building your event, you've still got trucks on grass. So we can actually notify them to get them to change their schedules, lay down wood chips, or some other solution that might work for them in the intermediary. Maybe they can build the whole event before it becomes a problem, and then the trucks aren't going to sink because they're not moving around. But in the event that it goes horribly wrong and you need to actually mitigate it, we can deploy capital instantly, a tiny amount of money in the grand scheme of things in a $1 million event, to, for example, hire metal roads and prevent the trucks from sinking. And we see that as a whole, that 4 in 10 of these total losses are preventable. Like, whilst you might pay out more often, you're paying tiny amounts, like 5% compared to a total loss. And then you only need one in 20 of these to actually be a success and not get cancelled in order for it to pay off. And the real world experience is that it's far more often that you can solve these small problems and prevent a total loss. And remember that your customers don't want to claim on their insurance. They just want to, in our world at least, have their events and put on a great show. They don't want to cancel it. It's terrible for PR, terrible for their own morale. And they just want to know that you're there in case everything goes wrong and that you can help them. And doing all of this doesn't cost much money and actually leads to much higher long-term returns. The only real cost is a small initial outlay to supply the additional services and support. But this quickly leads to vastly improved loss ratios by paying out less as a whole and also understanding the risk better to manage it and price it in the first place. And fundamentally, it helps you acquire and retain your customers. Nobody ever boasts about, oh, I love my insurance company. They just make me feel so insured. No, they love when you pay out quickly and when you actively help them. If you don't help them, then they're not going to ever recommend you to anybody. And if you actively help them, you give them things, they're going to tell all of their friends that you are the best insurance company out there, even if they've never actually claimed with you before. And it kind of takes one step ahead of all of that. And there are a lot of ways that you can apply this model in a lot of different markets and products. But the short version is take an active role and live like your customers to understand their problems. Don't just wait until everything goes wrong.